There you go. Now something's going on. You know something's going on here. So once you've got that sort of pace, you've seen the news now. So this is within about 3 or 4 seconds. You've kind of seen that news. You've seen tariff increase. You can get in. Now you know that you're in above 71. So once you get that break of 71, now you can start to think, yes, we're in business. Once you break through here, now you can try and get in. And the goal is to break then the low of the day and then down towards that 47 to 41 level. So Trump brings back the volatility. How do you trade this? Let's get to it. This is what came out. So Trump on Truth Social, and as is usually the case, a very, 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 very long-winded explainer that then has a nugget of information at the end. If you're going to do nothing else, with a lot of these truth posts that Trump puts out, it's actually often better to read them from the bottom upwards, because usually the sort of key message is typically at the bottom of the tweet or truth, whatever you want to call it. So that's a key thing. So first thing to be doing is making sure you're looking at that. So that was what was said. And ultimately, there was about 7 words that really mattered. Massive increase of tariffs on Chinese products. You don't need to know the specifics of this. You don't need to know when. You just need to know, and you don't even need to know how much. He doesn't specify how much here. You just need to know that this is a change. That's the key to this. So that piece of information comes out and markets tank. In fact, I've got Bitcoin there on the left, and you can see the scale of that move. This is on a 1-minute chart. So Bitcoin, this Bitcoin futures, by the way, dropping from about 122,000 to around about, at a low of around about 119,000. So 3,000 ticks on Bitcoin futures over the course of less than an hour. So that's a huge move. S&P, likewise, falls out of the sky. This is the biggest move we've seen in the S&P for a long time. So we got a couple of massive moves. As seemed to be the case, most people didn't trade these. Most people didn't realize that either there was news or what that news was. And you saw it, yeah, this hits the news wires, markets tank. And what I've seen, I've seen various different questions. I've watched a couple of YouTube streams on this as well. And a lot of comments that you see is people asking, first up, what's going on? Then you get the comments around, I'm glad I had a stop, and the advice to stay away from the market. Now, having a stop is useful. Don't get me wrong. That's great. You've got a stop, you were long, and you protected yourself. Absolutely fine. But what if you flip that the other way and go, okay, well, yes, I had a stop, but could I actually be making something out of this as well? That's what we're going to try and get towards. So how do you get on to doing that? You've read the news, and this is now just a case of assimilating information. You've read increased tariffs, markets start to react. Within 5 seconds, you should know what you're going to do in that. And this comes down to pre-planning. The best traders on news are the people who've already got a plan for this. The next thing is the market selection. You've got to be thinking about what's the most relevant market to trade. So which one is going to be most affected by this? But also, what's got the best scope for movement? What's got really, really good structure? And on Friday last week, the S&P was that. The S&P had sat in a range for the best part of a week or so. We built up lots and lots of volume up at record highs. It was ready to move. So the structure's there. And this is part of that pre-planning. You know that the scope was there in the S&P. So once you get that trigger, then it's just very, very quickly select your market, S&P, execute. Key to good execution on news. And this is something that people find very, very uncomfortable because they're thinking about risk. The key to good execution on news is that you go fast and you go large. You don't go in a little bit and then add or anything like that. You just go for it straight off. Point there being that when you get in first, that is probably the point where you have the greatest scope of payout and also the smallest risk. The further and further you add on, the bigger and bigger and bigger the risk gets, the smaller and smaller and smaller the payout gets. You can add as well. Many traders will add other markets to this. We've seen people trade in S&P, gold, Hang Seng, Euro stocks. There's a multitude of other markets that people may well take this trade on or add into at the same time. We're going to look at the S&P because that was really that was the obvious place to go. Structurally, the best place to go as well. This was the place to be. Just to give a sense of the relative performance across all markets on that day, the S&P was by far the biggest performer. Obviously, this is not S&P movement. This is P&L from traders. S&P by far the best. The S&P sat up here for really the best part of a week and a bit more. So between 6760 and 6800 roughly. Now, what you've got then is building up a position. This is one of the markets that's always going to be most impacted by tariffs because if prices rise, this is negative for US companies. But the key thought here then is as you come down the range, if you're getting in on this, you've got a few areas you're interested in. This is an hourly chart. So you're looking at yesterday's low. That's the goal. Can you get in before yesterday's low? If so, then you're looking for the move to break the recent range. This low here is 47, this one here 41. So straight away, if you're getting in on this, you already know that you've got a minimum, and this is the important thing, minimum target of 47. So that's going to be your first target. Then you can start looking down to other areas. And what we've got here is this really nice kind of block structure down here. Lots and lots of volume accumulated. And that's between around about 17 and 66.94. For most traders, they are not trying to hold on for the entirety of this all day. Most traders are looking at where the action is. And the action really is in this first move and then the next leg down to get you down into this zone, 67.17. Right, so what we've got here then is a 5-second chart. Really important to look at this to understand where realistically you could have got in. And I'll show you when we look at the ladders of it, you'll get a much better sense of the realism of being able to get in. Remember, you've got to read it, work out what it means, and then execute. Now, this is where the algos do have an advantage. They can see increased tariffs, read that, and hit. That's how some of these moves are so quick. The majority of traders are getting in here, somewhere around here, this little stall. This is 5 seconds worth of stall. Now, 5 seconds is a lot longer than you think when you're trading. So most people are in down here. And crucially, this is just above the previous day's high, the previous day's low, which is 67.71. So you've got that structure in mind. So you're now thinking, if I'm in here, first I'm getting through 71, minimum target, I want to see it down towards 47 to 41 area, which is basically here. So that's where your next target is. That's the minimum. Then the next zone to be targeting is down towards 17. And that's down here. I got 17, 19 as a bit of a level. So straight away, you're getting in. You already know now what you're looking for. And to give you a sense of the reality of taking on a trade like this, many traders were not in this trade for much over 3 minutes. That's the speed of these types of movements. And that's kind of the bit that people are really looking for. You don't have to be able to take the most ticks out of it. If you can take the immediate move on a large amount of size, you can get yourself paid very well on the immediate action. Most of our traders have been in and out, and their job was done. And it was potentially, for many people, their best day of the month, best day of the quarter. So key to this is speed of execution, clear targets, but also not panicking on a pullback. This looks quite brutal. And it's about 15, 16 full S&P ticks. But remember, this is in 5 seconds. So it's a very quick rip back, stall. Always be thinking, can you add on? Once you stall in this little range, and I'll show you this in a moment, it really shows up well on footprint. You can play the break of this for that next leg down. So what we've got here then is the S&P just before this. Not much going on. And it's just sitting there quite lethargically. Now, this is where there is nothing to be doing here. You don't want to be rushing in, trying to get into anything. Anyone who says, oh, you could have seen things to pre-position for this, I think you're finding stuff, right? All I'm looking at here is you've got this little low here, which comes in at 84. So that's the low of the sort of recent range. And I know that the day's low, or sorry, the previous day's low was 71. So they're the two references that I've got really in my head at this point in time. There you go. Now something's going on. You know something's going on here. So once you've got that sort of pace, you've seen the news now. So this is within about 3 or 4 seconds. You've kind of seen that news. You've seen tariff increase. You can get in. Now you know that you're in above 71. So once you get that break of 71, now you can start to think, yes, we're in business. This is where you then have to start thinking about how much further is this going to go? Not panicking as the market starts to rush around. Now you do see there's a quick exit there, and I'll just pause this for a moment. You can see an exit here at 61. Now the reason for that exit is you've had this very quick move down, you've had this flush, and then you get this very fast rip back up. And within that, you will have got this sort of two-directional trade here. And this is where footprint's helpful for this type of thing. Two-directional trade, you get this build-up of color here. Then we break through a very, very fast absorption. Market jumps. This is a chance to then cover a little bit, but always be thinking, can I get more back in? Remember yesterday's low, 71? That's the place straight away. You can get some offers there. So you've got out at 61 for part of your position. Then you're going to add back in at 71. And this is then where we start to then see the market build some value. We're building in this small range. And this is where you're sort of getting this second wave of people trying to get themselves in, working out, is this going up? Is this going down? What you can do here is use 60, 61 as your entry. Once you break through here, now you can try and get in. And the goal is to break then the low of the day and then down towards that 47 to 41 level. So you see now we're on our way down. Hit 48, so we're nearly there. Then we get that very quick flush down. This way you're looking to see, can we get something more? Don't get it. Get an order in to try and get yourself out. If you can't manage that, then as we come back up above that 47 range, this is then where you do need to start to really think about exiting this position. So that's really, really quick. It's probably about a minute and a half in. And now we're seeing that same pattern again, this kind of rotational action, building up some volume in here. And this is where you're now waiting for the next leg down to get you back towards that 43 and potentially to add on to this as well. What's really key, I was talked to a newer trader about this today, is just having the kind of cognizance to say, do you know what? There is a bigger move in this. Yes, I'm going to get these bigger whips back against me, but once you've moved away from this kind of consolidation zone, you're now ready for that next leg down. So it's all now about looking for the next place to go. Next place to go is 19, 17 area. And that's then where you're finally going to look to try and exit this trade. So there's a lot going on, but what's so vital here is just recognizing that pace is not dropping, knowing where your targets are. We've just seen it again there, flush down and bounce. So if you are looking for an earlier exit, 33.5 could be your place now. So I would now see bid coming in at about 35. Still can't quite get filled, so trying to get that one out a little bit higher. So we're out now at around 38, but still we've got that potential down towards 19. And so this is now, you're still waiting it out. If you've got some part of your position left, you can wait this one out. looking then to sell. Remember that previous 41, the low of the range, looking then to sell down there. Crucial thing, you just saw an order go in, bid get placed lower. One really important thing is when you've got a plan to get out, you've got your targets there. Get out at your targets. Yeah, if you've got that sort of nailed on target down at around about 19, get out down there. Put your orders in, because if this flashes down, you want to be out of that trade. So this is where we're now still carrying a little bit of position on the downside here. And you now start to form this range once again. The ranges are getting wider. Yeah, at the end of the day, this market is now starting to settle down. We've had that initial movement. It's around about 3-4 minutes after the announcement. So now trying to sell it through the low. So looking again for that kind of pace as we approach the low. And this is where now, if you've got a target, as I said before, get your orders in. Get your orders placed down at your target. There we go. First one out, down at just below 20. Now you see an absorption. Look at this. And this is where you can then place your stop. You've got this absorption. You're roughly down at where your target is anyway. Place your stop, get stopped out. Job is done now. And then this absorption does continue for a while. But this is the kind of point where you have to then step back and say, do you know what? I've done well here. I'm happy with this. The worst mistake that many people make now is chasing it, trying to extract something more out of this when really the opportunity is already gone. So that gives you a sense as to how quick you need to be to get in, but also how quick these moves can develop, how far we can go. The S&P there has moved the best part of 75 points. So what we saw then was the entries around here, initial exit, re-entry, market continues to come down, breaks through the low, we then get out around 38, then looking to try and sell it through the low that one more time, and then out down here, and then the stop out on that absorption. So that's how you can capture all of that within about 3 minutes.